Money Show.
Personal Finance with Warren Ingram.
Warren Ingram is a financial advisor, director at Galileo Capital. Is it time to pack your bags? It's a conversation I think lots of people are having. Certainly the interviews I've heard with various people who run immigration agencies, people who help people to find out whether or not they've got a distant great auntie in a foreign land that allows great nephews and nieces to emigrate there if they have, 75 cents or whatever the case is. There's been a surge, and there always is a surge in inquiries. Not everybody does take the plunge, Warren, but people are apprehensive about the future, and it's, I think, perfectly natural after a week that we saw last week that people feel that way.
You're right, Bruce, and I think it's feels a bit shocking almost in a way where we've gone through just before that, a few weeks of good news where it felt like the good guys were winning and things were moving in a direction and, might have been slow, but, everything was starting to kind of gain traction. And then we had this, awful time. And I think, that sort of whipsawing action just makes the whole situation so much worse. And as you say, I mean, it's a human thing for us to feel that, it's a human thing to be angry. I mean, I'm really angry and a lot of us, I haven't said it on air, but my wife and I are temporarily in KZN, and it was real, it was real, not knowing where you're going to get food and those kinds of things. And so, being in a situation like that, coming out of that and then, having to kind of zoom out and look around and say, things are maybe not as bad as you think. It's quite an emotional time for most South Africans, and especially those sitting, closest to the coalface of this. And so it's difficult, sometimes to try and be rational and kind of level-headed and balanced in one's view. But I think that's exactly what we need to do in a time like this. It's really important not to look at this and say everything's wrong. Everything's gone south. The whole country's going down the tubes now, and any good that was done before seems to now be forgotten. And I think that's maybe the perspective that I want to talk about is we need to realize a lot has gone right in the last months and maybe years now, where Zuma's in jail. Maybe not right today. He's attending a funeral, but the point is he is in jail, and that's something that a lot of doomsayers said would never ever happen. We could have taken huge bets with lots of people saying that, that's just not something that we would see in our lifetime. And that happened, and we're seeing more and more bad people being suspended. We're seeing a resolution around SAA. We're seeing, I think, a resolution around Transnet coming very soon. And we're seeing a deregulation of Eskom. All of those things are bits and pieces of really good news. Yes, you could argue they've taken too long. We've seen the country doing more than 250,000 vaccinations. I've had many of my industry colleagues telling me that, with great conviction, that they wouldn't see South Africa vaccinating large numbers until late 2022. And they were saying it with deep conviction. And here we are.
No, absolutely. I mean, we always assume the worst, and we're kind of surprised when the worst doesn't transpire, and we don't believe the good when it happens. Here is our brutal reality, though, exposed to us in painful orange technicolor last week in terms of the fires of rage and anger, and possibly the fires of political insurrection. I'm still not sure until I see some convictions whether or not I buy sort of political paranoia on this particular point. But there does seem to be an elevated level of vindictiveness associated with last week's riots. Is the vulnerability of the country as a result of the failure of proper economic growth and transformation? That is the biggest failure. Lots of stuff's gone right. Yes, the sun shines. Yes, the Bokke do well. Yes, we've got an Olympic team at the Olympics, and we may bring home some medals, and it's going to be fabulous, and we will celebrate that. But 42% of people who want to work can't get a job, Warren, and the vulnerability of those people to the tide of misinformation and the promise that things will get better if you just go and help yourself. The lies that they are told and their vulnerability to those lies reveals a very fragile underbelly, doesn't it?
It does, and I think I know some of your points you're making might sound flippant, but I know they're not, and I think the reality is that some of those things that have happened, the deregulation of the power market in South Africa are critical events in creating jobs. We are in an environment where I feel that we've got at least a few people in charge of the ruling party right now who have a deep understanding that the time for ideology is not now, and that things need to happen economically for us to create jobs, because this threat that's been looming over us for years has come. And it has arrived, and we can speculate for years about the exact match that lit this fire, but the ground was laid for this a long time ago, and it is here now, and so I'm hoping that this was the kind of stark message that the rest of the leadership in the ANC and the unions and business needed to hear, which is stop wasting time, stop talking about things, and let's take action. And that's my point. Action was starting to be taken even before this. And I think it is, I'm not sitting here predicting that this was the crystallizing moment where South Africa stared over the precipice yet again and now everything's going to be great. We've got enormous problems. But what we really lacked, I feel, as a country, was a political leadership that felt the urgency to actually take action. And I feel like that was starting to happen, and I'm hoping dearly that things will start to speed up. And I don't think it's just me. I've been on the phone with a large number of fund managers this week, watching many of their investor briefings this week. And the events of the recent past are on everyone's mind. And fascinating to see that these fund managers who are able to move money wherever they want are saying that they're expecting the South African stock markets to deliver us returns of in the region of 18 to 23% a year for the next 5 years. And these are people that have no vested interest in saying that. 3-4 years ago, they were saying they're expecting much bigger returns from the international markets than from the JSE. And for them to pivot in that way after the events of last week is something worth considering. These are not all South African fund managers. And I think that's the message for me is we're sitting in a time where a lot of us will be listening to these doomsayers out there, kind of beating their drums, saying, now we told you so, get your money out. If you haven't already, sell everything and go. And here are global fund managers and South African fund managers saying, we think this is a place where you can do really well. I mean, 23% a year, if that's the optimistic scenario for the next 5 years, is a heck of a return. You're more than doubling your money over that time. And so what are they seeing that we're not? And I think what they're seeing is a lot of this that happened in the last week has been kind of forecast to us by these kind of, especially global managers. They didn't necessarily say you're going to have looting and rioting, but they've been saying for a very long time, you as a country have enormous risks, and those risks, were shown to us. That doesn't mean that it wasn't already in the price of a lot of what's, of our assets. And I think for me, that's a critical point.
Okay, good. Thank you, Warren. I mean, yesterday, the chief executive of JSE Limited, of course, Leila Fourie, was tweeting about the valuation of the JSE relative to the rest of the world. And again, she is the chief executive of JSE Limited. She wants people to buy shares. She wants volumes of trade to grow on the JSE. But I'm quite encouraged by that particular perspective. I've got a question for you this evening, Warren. And that question is kind of related to the broader theme of what we're doing. And it says, I've got a personal finance question for Bruce to pose to Warren. Okay. Oh my, chopped liver. Last year, I had to liquidate all my investments to get my family through COVID. Fortunately, I'm in a better space now. I'm glad to hear that. And disposable income again to invest. I am starting from scratch, so I wanted to find out how much money should I keep in a cash reserve before I start investing in the market. 3 months or 6 months salary. Also, should I focus initially only on building up my cash reserve? Good question. Or should I invest cash and the market concurrently? Big word as well. That's from Benedict. Benedict, we'll get to your question, get an answer to your question in a moment.
The Money Show.
Personal Finance with Warren Ingram.
There's an email just this week, Warren, and he had to liquidate investments to get his family through COVID, but he's in a better position now, and he wants to start investing in the market, but also he wants to build up cash reserves. That emergency fund you always tell us is so important. Can he do it concurrently? Because the temptation is so strong, especially if he believes the view of the asset managers you've been talking to, that suggests that, for the next 5 years, we should see some very nice returns on the JSE. So he wants, he doesn't want FOMO. He doesn't want to be sitting, building up this emergency fund and watching markets run away from him, because that'll really annoy him, I think.
And I understand the temptation, because it's good to be greedy when others are fearful, and certainly I think fear levels are heightened in South Africa. So it is a good time to have this attitude that climbing into investments now could be an opportunity that's not often repeated. I think the problem for me, though, is when someone's just come out of a kind of financial trauma like Benedict has been through with COVID. Then I think, when you've got no reserves, unfortunately, life happens again. That's what happens. It just seems to repeat itself. And the best way to protect yourself against, the next sort of financial disaster is you have to get some form of financial insurance. And for me, the best form of financial insurance is that emergency fund. And typically, I see Benedict, saying 3 months to 6 months of his salary. And I think slightly different, Benedict. I believe it should be 3 to 6 months worth of your expenses. So in a situation like this, where you'd like to get going on investments, I understand that, but then perhaps try a compromise, which is save at least 3 months worth of your expenses as a starting point. Don't start investing before then. And once you've hit month 3 of your monthly expenses, and that's saved in some kind of a money market account, a place that you can access the money quite quickly and easily, and no penalties and fees and all that stuff, then you can start saying, well, let me invest some money into the markets, and then some money to kind of keep boosting the emergency fund until it gets to that 6 months of expenses. So I think it's an important thing to do. You have to get your emergency fund going before you do anything else, but you can start to do it concurrently, as you say, once you've got your first 3 months of your emergency fund built up, and then by all means, get going on the investing after that. And it's amazing when you do that, those financial emergencies just don't seem to happen as much. And the reason for all of this is, if you have another financial emergency, you have no emergency fund, that means you have to go into debt. And debt is always an incredibly expensive thing when you need to get it in a hurry, for short-term expenses. And there are no investments that are guaranteed to grow as fast as your debt will compound against you. So unfortunately, you do need the emergency fund before you start the investing. But then I agree, get going, Benedict.
I sometimes forget how sensible you are, Warren. I thought you were going to get all prescriptive and bossy, but you didn't. You met him halfway. I thought that was very nice. Now listen, phrase of the week. I know this one. I know the answer to this one, but I'll let you explain it. What is market capitalization? It's thrown around like sweeties at a party. People sort of assume everyone knows it, but what is market capitalization, otherwise referred to as market cap for the cool kids?
Yeah, market cap is what you tend to hear from the stockbrokers and fund managers when they're talking about the stock market, and they'll usually say something like, this is a large cap, a mid cap, or a small cap company. And so the context of that is, market capitalization is the number of shares that are issued by a company that investors can buy, times by the share price. So in other words, it's the total stock market value of that company. And very simply, if a company issues 10 million shares that are available to be bought and sold on the stock exchange, and there are shares trading at 100 Rand a share, that means that the company has R1 billion market capitalization. And so that's the kind of brief thing. And then, large cap, mid cap, small cap just simply means, are these companies very valuable, sort of medium-sized or smaller sized, and not in terms of are they cheap to buy or are they currently expensive, but just sheer size of the company in terms of the market capitalization. So it's not really a measure of is it a good time to buy that company or anything like that. It's simply a measure of size. And in South Africa, the big dogs are kind of four or five of the biggest companies in the JSE make up, a huge part of the value, way more than 60% of the value of the stock market. So the size of those companies are so big proportionate to the rest of the market. But that's market cap in a kind of shortish, longish explanation.
Thank you, Warren. Let's just check your general knowledge. I want to see how good you are on this. How many doses of vaccine have been administered as of the close of business today in South Africa, considering the really rubbish start we had?
Can I have one clue? Is it more or less than Wednesday?
Well, obviously it's more than Wednesday.
So we did about 257, I think.
No. Fewer vaccines were administered today than on Wednesday. Yesterday was the best day so far, at 257,492. Today, just 238,000, so slightly less. But in total, we've administered 6 million vaccines, and of the adults fully vaccinated, so that is people who have received all the jabs they need, 2 million. 2 million adults fully vaccinated.
It's worth celebrating.
It is. I mean, we're late to the party. We shouldn't, we mustn't celebrate the failure of the beginning, but boy, oh boy, we're playing catch up nicely. And that's what I like to see. Warren Ingram, thank you, from Galileo Capital. Big discussion this evening on the future of South Africa, the future of investments. I hadn't seen those reports of the predictions of some of the big fund managers, which was nice to hear. Thank you, Warren Ingram.